This is task 9 from the first AAT sample assessment for personal tax. So task 9, test capital gains tax. So in part A, you need to identify whether the following statements about capital gains tax are true or false. So the first one then, unused annual exempt amounts can be carried back and used in the previous tax year. Well, the answer to that is false. So the annual exempt amount is relevant for the current year, where we can't use it in other periods. Next then, connected persons can transfer unused annual exempt amounts between themselves. Well, let's just remind ourselves what are connected persons. So a connected person is an individual that is connected with their spouse or civil partner, with their relatives and their spouses or civil partners, with their spouses, relatives, and their spouses and civil partners, but it also includes business partners and their spouses and civil partners and relatives. Okay, so there's quite a large group of people who can be considered to be connected persons. And why do we care about them? Well, if we are a connected person, that means that any disposals between them have to be at market value. So HMRC assumes that as they're a connected person, then we may not be selling to them at the market price. There may be some sort of special deal going on. So any disposals need to be at market value. Now, the exception to that is if you have a disposal to your spouse or civil partner, because those are exempt. We're allowed to transfer assets to our husband and wife without any capital gains tax. Now, the other thing as well is if we make a loss on a disposal to a connected person, then that loss can only be used against gains to the same connected person. Okay, so there's quite a lot to remember here for connected people. But in terms of our question here, can they transfer any unused annual exempt amounts? Well, no, they can't. When I move on to the third statement, a taxpayer can only have one private residence at any one time. Well, we could own multiple places. We could have multiple homes, and some of them may be rented out, but then if they're renting them out, that's not a private residence, is it? But potentially we could have two homes and we could live in them, in both of them or more of them during the year. They could have holiday homes, for example. But as far as capital gains tax is concerned, well, we can only have one private residence, so that is true. And then the fourth statement, the annual exempt amount is deducted from chargeable gains before allowable losses brought forward are deducted. And that's true. So when we are carrying forward losses, we can still make use of the annual exempt amount, which is a good thing. We'll see an example of that a little bit later on in the question. So let's move on to part B of the question. So Miss M made the following capital gains and losses during the 24-25 year, none of which relate to residential property. Miss M's only other income in the year was employment income of 45,970. So that tells us that Miss M currently is not a higher rate taxpayer. But potentially with these gains, it may just push her over into the next band. We'll have to see. So the question asks us to complete the following statements in respect of Miss M's capital gains tax liability in 24-25. So we need to work out the total amount that Miss M will pay capital gains tax on. And the word on is the key one here. So what we're not trying to work out here is not how much tax there is, but we're basically how much is the gain. And then the second one, how much the capital gains tax will be for that period. Okay, so in the year then, we see that we have these 4 different disposals. So what we need to do first of all is work out what the total of all of these is. So we have the first gain on disposal of 17,400, and we have another gain of 6,890. But we've got 2 losses, and what the rules tell us is that those losses need to be offset against current year gains first of all. So we need to take off the 3,450 and the 1,890 So those losses are deducted from this year's gains, and that gives us a total gain for the year of 18,950. Now from that, we can take off our annual exempt amount. Again, there's a reminder in the multiple choice questions that this exists. So yeah, let's remove the 3,000 annual exempt amount. And that means we have a total of 15,950 as our gain after allowances. So how much of that is going to be taxed? Well, we need to think about the various bands. So as we've seen in the various questions we've been doing in this sample assessment, we need to stack our various gains on top of each other. So, and then work out which bands we're going to be fitting into. So we've got our basic rate band, and then above that our higher rate band. So we take our employment income, which is the 45,970. And from this, we need to deduct the personal allowance of 12,570. So 45,970 minus 12,570 gives us 33,400. So that figure after the personal allowance is the first block of income in our diagram. So we have 33,400. And then on top of that, we need to stack our gains. So we've got a gain of 15,950. And you can see that some of this gain is going to be taxed at the basic rate band, but this does push us over into the higher rate band. So we have to pay a different tax rate on that. So we can see then our basic rate band, so if we remember from our tax tables, our basic rate band is 37,700. And if we take our 33,400 from that, that tells us that we still have 4,300 of our basic rate band that hasn't been used by our general employment income. So that means of our capital gain, 4,300 will be taxed at the basic rate, which for capital gains is 10%, and this is available in the reference materials. So our total gain is 15,950. So if we take from that the 4,300, that means the top part then we have 11,650 falls into the higher rate band, and we're going to be taxing that at 20%. So the 4,300 times by 10% gives us 430, and then the 11,650 at 20% gives us 2,330. So in total we have 2,760 of capital gains tax to pay. Then for the final part of the question, Dr. P had the following capital gains and losses in the last few years. So we have for the 22-23 year, we've got the gains, we've got the losses, and we've also got the annual exempt amount, and notice how this number has been falling over time. And then in 23, again, we've got some gains and losses, and 24 gains and losses. And part C tells us to complete the following statements. So the amount chargeable, if any, to capital gains tax for the 24-25 year is, so we're focusing on that final year, but we need to take into account there may be some carried forward losses. And the amount of losses to be carried forward for the following year is how much. So remember, the first thing we need to do is work out what is our net capital gain for each year. Because if there are any capital losses, they need to be offset against the gains in that year. Okay, so that's the first thing to do. What is our net gain or loss? So in the first year, we can see we've got capital losses of 32,900, but our gains are smaller, 24,800, so it means that we have a total net loss of 8,100 in the first year. And all of this can be carried forward and used against future gains. And then in the second year, so we can see we've got capital gains now of 47,200, which is bigger than the losses of 38,100. So in this case, we have a capital gain. Let's put that in brackets there to make sure there's loss. So we got a gain now of 9,100. But before we use last year's losses, we're allowed to utilize the annual exempt amount. So that means we have a gain of 3,100. And then we can deduct the prior year losses carried forward. So that means that we have no gain at all. So if we're using 3,100, it means that we have now 5,000 available to carry forward into the 24-25 year. So let's have a look at that year now. So yeah, there's no capital gains tax to pay in the second year, and we have 5,000 of losses available still to use. So in the final year then, and that's the one what we're focusing on, so we can see we've got capital gains of 44,000, which is bigger than the losses of 28,650. So that means overall we have a gain of 15,350. Now remember, before we can use the carried forward losses, we're allowed to use the annual exempt amount, so we can take off the 3,000. So that means we have 12,350 of gain remaining. And then we can use the remaining 5,000 of brought forward losses. And that means at the end of the day, we have a total of 7,350 of chargeable gains. And then do we have any losses to carry forward? Well, no, we've used all 5,000 of those now, so we have no losses to carry forward.